An ARK Invest favorite, Exact Sciences, is dropping 23% pre-market after reporting their third quarter 2024 earnings. So is this cancer screening stock worth buying today on the dip? Well, let's find out. So like I said, Exact Sciences is a cancer screening company. They're most well known for their Cologuard product. It's non-invasive. It tests for colon cancer using a sample of something that a patient provides. I won't get into the details, but what sent the stock down today was their third quarter results. So their revenue for the quarter came in below analyst expectations. So that's the first bit of bad news. Quarterly revenue was $709 million. And while that is 13% year-over-year revenue growth, the market was expecting more. Well, that was certainly bad news. I think that was overshadowed by the guidance. So Exact Sciences, being a cancer screening company, they are very much a growth stock. This is an emerging disruptive technology, the things that they're doing, and the market values the stock today on their potential future cash flows. So they want to see this company continue to grow, continue to build those revenues up and up and up. So when they cut their revenue guidance, it's not a good look. So previously they were expecting full year revenue of 2.81 to 2.85 billion, and they cut that to 2.73 to 2.75 billion. So not the biggest cut, but still definitely a notable guidance cut for total revenue for the year. We can see that their precision oncology unit guidance is relatively the same, right? The old low end is the new high end, so it could potentially be the same. But where they really saw the cut was in screening, and that's things like their Cologuard product. So let's get into that quickly and find out what Exact Sciences does and what their whole value proposition is. So like I said, the Cologuard test is their main product. It's non-invasive at-home stool test. It screens for colon cancer in adults age 45 and over. So when humans get older, this is men, women, it's not specific to one gender. As they get older, they become at a higher risk of colon cancer. And so Exact Sciences has found a way to screen stool, to screen, human waste, to find out whether people are showing early signs of colon cancer. So like they say, it's non-invasive. You don't need to get a blood draw. You don't need any kind of tissue test, nothing like that. It's a little embarrassing, but you simply just, leave your sample in a little container and ship it back to Exact Sciences. They test it in their lab and they tell you the results remotely. So this test has seen great demand. They're definitely the leader in non-invasive colon cancer screening. However, they also have other value propositions here. So they have the OncoGuard liver test, which is a blood test. So you would have to get your blood drawn for this, but it helps find the most common liver cancer in people with certain diseases. There's also the RiskGuard test, which tests for multiple types of cancer, and in development is the CancerGuard test, which is an early detection. So this is, very speculative. It's something that could be high growth, but also a lot of risk for them because there's going to be regulatory hurdles. They're going to need to get FDA approval, but it's in development. It's a blood test being designed to help find multiple cancers in early stages. So it's kind of like a Theranos, right? So hopefully it's not going to come with the with the issues that Theranos had, but this is what Theranos was trying to do. Exact Sciences is trying to do it right. I did not mean to compare Exact Sciences to Theranos. I don't think Exact Sciences is Theranos. I'm saying that this is what Theranos was alleging that they could do, right? Anyway, let's keep going. So those are Exact Sciences' main value propositions. But what we can see is that where they make most of their revenue is screening, but they have this other division, precision oncology. Now, precision oncology is not growing very well, and it doesn't make up a very significant portion of their total revenue. So me as a non-scientist, I was curious to see what precision oncology really is, what it makes up, and why they're dabbling in this. So the NIH says that it's still the case in most medical care systems that cancers are classified mostly by the type of tissue or part of the body on which they arose. So you have lung cancer, breast cancer, colon cancer, right? However, they claim that a radical change is underway where you can identify the molecular fingerprints, quote unquote, of various cancers and use them to divide cancer's broad categories into precise types. So that's where the precision oncology comes from. Oncology is just the study of cancer. So this is the precise study of cancer. So if I were to use the BCG matrix, and those of you who went to business school probably are familiar with the BCG matrix, I would consider precision oncology to be maybe a bit of a dog. So those who don't know the BCG matrix, it's the Boston Consulting Group. At the top left, you have stars. These are things with high growth and high market share. And at the lower right, you have dogs, which are low growth, low market share. So it seems like for Exact Sciences, screening is growing really well. It's growing faster than their overall revenue, and it's where they get most of their revenue from. And they are a leader in that space. So that would be a star. High market share, high growth. You want stars. Precision oncology seems like it's been a dog. It's not growing, and it doesn't make up much of their revenue. However, I wonder if we can't see this dog turn into a question mark. So the only difference between dogs and question marks are that question marks have a little bit more market growth. So I went and dug into the total market for this precision oncology, and it's actually quite large. So here's an article from Markets Insider that claims that Exact Sciences is set to dominate the emerging precision oncology market with a $18 billion potential market. Now, you always have to take these total addressable markets with a grain of salt. They're often over-exaggerated, but that's still quite a large total addressable market, especially when we consider that after today's drop, Exact Sciences is only a $10 billion company. So to expand into an $18 billion total addressable market, that could quickly turn that dog into a question mark or a future star, right? So the stock, it's a growth stock. They cut their guidance. They're not seeing a ton of growth in this precision oncology. They missed their revenue targets. Is this competition? What is going on here? Well, according to the CEO, he says, while we have made progress, our execution during the third quarter and updated outlook for full year doesn't reflect our full potential. We plan to accelerate growth in 2025, and our long-term outlook remains strong. Now, a CEO does have a duty to be honest with shareholders, so I don't think the CEO is lying about that. If the long-term outlook remains strong, I don't particularly see a reason for such a massive drop. I think what tends to happen with growth stocks is that they're expected to post strong revenue growth, and even sometimes the market will bake in a bit of a premium, hoping that they beat expectations. So when a company not only misses expectations but cuts the revenue guidance, the market kind of goes into this sell first mentality where they say, wait, this growth stock isn't growing as much as we thought. Oh no, is the thesis over? Sell, sell, sell. It goes into this sell first mentality, and I think that's what we're seeing with Exact Sciences. So I've developed my disruptive growth stock spreadsheet to analyze growth stocks and kind of value them. So I put Exact Sciences on here, and after today's drop, if it holds, they're one of the highest scoring stocks on my spreadsheet. So let me tell you about this spreadsheet. It analyzes stocks that are growing, and it uses 4 factors that don't necessarily rely on profits, right? Because growth stocks tend to prioritize revenue growth as opposed to bottom line profits. So these 4 factors are gross margins, annualized revenue, price to annualized sales, which measures valuation, and quarterly year-over-year revenue growth. I aggregate these values and I give them each a score from -1 to 5. Total possible is 20. My average is about 11.5 to 12, and Exact Sciences gets 13.5. So they're up here with the likes of Adobe, Meta, Salesforce, these big established companies that are still growing, that get high scores because of that, right? I reward companies with high annualized revenue because it's more difficult to grow your revenue if you are starting with a larger number, right? And I reward low valuations. Exact Sciences has a price to sales of less than 4. That's extremely low for a growth stock. Okay, maybe not extremely low, but it's not uncommon to see growth stocks with price to annualized sales of 8, 10, 12, 20 even, depending on how quickly they're growing. And they still have these strong gross margins, almost 70% on a GAAP basis. That's the generally accepted accounting principles. That tends to be what I look at, and still double-digit revenue growth. 13% year over year. Now, of course, we have to use their new outlook. So let's say 2.74 billion at the midpoint, right? Last year they brought in 2.5. So doing a little bit of math, that is 9.6% year over year revenue growth. So definitely a deceleration, but still you could round that up to 10. You could call it double digits if you wanted to. I think with this low valuation on a price to sales basis, even 9.6% annual revenue growth is still quite strong, and you're not really paying a premium for that growth. One other thing I did was looked at free cash flows. So while Exact Sciences is not profitable, they did have free cash flow of 113 million. So I annualized that. This was in the past quarter. I multiplied this by 4. If you just take their market cap divided by their annualized cash flows, we get a price to free cash flow of 22, which is also on the lower side, especially for a growth stock. So Exact Sciences is looking really, really cheap across the board. What I don't like is, like I said, their profitability. So research and development, 20% of their gross profit. So their gross profit is essentially their sales minus their cost of sales. So everything that is needed to make these Cologuard products, you take that away from the actual revenue from Cologuard products and their precision oncology, everything. But what's left over is your gross profit. So of that gross profit, they spend a 20% on research and development. That's not low. I wouldn't invest in anything with greater than 50%, but I like to see that in the teens at the most. But then what really gets me is their SG&A to gross profit is 80%. So 80% of their gross profit goes to selling, general, administrative, 20 goes to R&D. So as you can see, there's nothing left over. They are not yet profitable. And that's fine. Growth stocks don't tend to be the most profitable. I think it's okay to be unprofitable if you're growing. Where I think the market kind of adopted that sell first is because, well, now they're not growing very much and they're not profitable. That's not a good place to be. We look at companies like the ARC favorites, right? The Teladocs of the world, where they were growing, so it didn't matter if they were unprofitable. But now that they're not growing and they're not profitable, the market wants nothing to do with them. So Exact Sciences, is this a buy today? Well, like I said, I think the market did a sell first mentality. They sold the stock without actually thinking about the valuation. The stock was even down as much as 30% last night, so it's definitely recovered a bit. So I think the market is realizing that the stock is now quite cheap if you can take a long-term view. We have a total addressable market of around 18 billion potentially, so that still gives them lots of room as they only have about 3 billion in annualized revenue, so they could still 6x the revenue over the long term. So they're not going to, run out of market anytime soon. Valuation seems quite low on a price to annualized sales and price to free cash flow basis. Obviously, we don't have PE because this is not profitable, so again, a little bit more risk. But all in all, this does look like a nice buy today, and I would like to do a little bit more research on the company before I decide whether or not to invest. So if you are a member of my YouTube channel, I post my trades for members only. It's $2 a month. If you're interested, it's a good way to support the channel and to see what kinds of things I'm buying/selling. It's usually buying. Thank you guys so much for watching the video today. What do you guys think of Exact Sciences? Leave me a comment below, your thoughts of the company, what you're doing, if you're buying, selling, holding, staying away. And I hope you all have an amazing day.